Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'll be your host for the next 25 minutes here on Options Guide TV. All right, heck of a weekend for news. We still have a lot of companies that are announcing earnings, and probably the biggest company is announcing earnings this week, Wednesday, after the close. It's NVIDIA. Everybody waits for NVIDIA to announce at the tail end of each and every earnings season. Highly anticipated by most analysts that they're going to beat expectations and have a strong quarter. Doesn't necessarily mean that NVIDIA is going to go up. They've had strong quarters before, and buy the rumor, sell the news applies to NVIDIA time and time again. We will definitely look at a trade on Wednesday in NVIDIA. Stock has basically just been hanging out, trying to decide where it wants to go to next, but not as much in the headlines as many other companies. We looked at Netflix. It has the government is looking at antitrust issues with Netflix and their dealings with Warner Brothers, WBD, and they're coming to a head. But we actually bought long some shares of Netflix, and that's one of the long stocks that we have inside our option trading portfolio, our paper trading portfolio. We have Home Depot that's announcing earnings tomorrow. We also have Lowe's that's announcing this week's, and TJX. So quite a few of retailers are starting to announce. This is also usually centered around when when NVIDIA is announcing earnings. And then because of the trials and tribulations of this weekend, we see gold is up almost 2%. And I do like to trade gold. I like the markets in gold. I like the volatility of gold, and I want to go back in and look at a bullish trade in gold that I think you'll like too. And it just has a lot to do with the skew in gold as far as volatility is concerned. And we might do a little something, get a little crazy in the trade. We might look at two trades centered around where the underlying stock is at. So I don't think, we have the VIX up above 20 at this point in time. And right now we got the VIX at 21, actually. It's up 189 on the day. And so that I don't think volatility is going away anytime soon, especially with the tariff war between, the Supreme Court and their ruling and the administration's response to that ruling and bumping it from 10% to 15% basically within a couple of hours. So there's still a lot of things that will have to play out here. And I think that volatility will stay high up until that point. Okay, so the rush to gold, the rush to safety has happened. Now, Home Depot has anticipated a strong quarter. Home Depot is still selling, out of Home Depot and Lowe's. Home Depot trades at a little bit higher valuation, but I anticipate that we'll probably have a solid earnings. Home Depot stock really hasn't done much recently. So let's take a quick peek at the chart here. We got the 20-day, we got the 50-day, and the 200-day. And once again, we're just in an area of chop. Little bit of a head and shoulders here, right? But it didn't really take to the downside. The stock has stabilized. And if we do get a positive catalyst, there isn't anything inside the chart here that is saying, let's buy Home Depot. But if we get this catalyst, we still got the room to the upside. So we're looking at all the way up to the top of this peak at 424 with the stock at 373. So I do think that the earnings report could be a catalyst, trading at around 25 times earnings right now on a trailing PE basis. Let's get long Home Depot. So I already put a trade in the what if calculator. Well, first of all, here's the long straddle. So always like to know when the earnings is coming, what the nearest term expiration long straddle is trading for. So that's going to be the 27th, which is going to be this Friday. If you buy the at the money call and the at the money put, that was trading for $16.62. Based off of where the stock is at. Home Depot right now, let's send this to the tick. Home Depot, if you add the at the money straddle to where the current stock price is at, which is 374, you come up with right around 387.50. 387.50 is about that's the most the closest strike based off of what the at the money straddle is trading for. As a matter of fact, Home Depot's, since I did my research, it looks like Home Depot has just jumped once again. It always seems to, people are always hanging on our every word, it seems like. And Home Depot is at 373.87 right now. So it bounced. It bounced 3 points since I've started looking at Home Depot this morning. So here's our trade. Here's what we're going to do in Home Depot. We're going to go back to the well and look at doing an open wing butterfly in Home Depot. So if we go to the what if calculator, we have the long butterfly. And I'm going to go a little bit out of the money. We're going to target the expected move to the upside. And we can get this done fairly cheap on a very expensive underlying stock. So we're going to send this to the ticket. And we're looking at 159. That's where it was. Now it's 295. Okay. Man, we really moved on that trade. Let's go look at it. We're going to probably have to adjust it. It was about half that price because right now we're 2.5 points. This comes in. We are 10 points wide and 5 points. Yeah, that's still not horrible. Okay, let's go back and look. Let's look at the trading options grid. We just moved about 5 points in Home Depot since I set this up. We're still okay. So here's this. We're going to have to move this 5 points up. We got to move this 5 points up. Okay, so here we go. Let's clear this out. 385. We're going to go 10 points to 390. Sell 2 of those. And this is 10. Then we go 5 points to 395. And we buy one of these. Oh, this needs to be -1. And 238. All right, it was closer to $2. We're going to, okay, so here's our trade. We got stock at 337.50. You add 16.5 points to that, we're getting pretty close to 390. The stock just moved about 5 points to the upside after just down with the market. I would say in general with Home Depot, you got a couple of stocks that are up today, and it's the market's struggling to try to stay positive, if you will, at this point in time. We got the S&P 500 index actually down about 0.5% at this point in time, which means it's hanging in there. It's hanging in there considering we're down about 1% in the S&P 500 index right now, down $63 and so the market's trying to hang in there after all the news over the weekend. Let's look at Home Depot, 337.25. We're going to go a little bit out of the money, buy the 380, sell 2 of the 390s, buy 1 of the 395s. Let's send this trade to the what if calculator, and let's talk about what happens if we blow past the expected move. So what's the expected move? On earnings, you look at buying the most at the money call, you buy the most at the money call and at the money put. To me, that is like looking at the over under. Do you think that the underlying can move more than buying the at the money call and at the money put, or do you think it can move less? And here's what the long straddle is. So if you think it can move more, you buy the straddle. If you think it can move less, you sell the straddle. That's what the concept is. In my mind, it's like setting the over under on an earnings report if you're talking in the gambling spaces. So it doesn't mean the market's going up. It doesn't mean the market's going down. They're just saying that this news could create this type of movement. And what type of movement is that? Approximately a $16.62 movement, because we are, if you bought the at the money long straddle, bought a call, bought a put, that's what you'd have to pay for it. All right. So on Home Depot, that puts us right about here, right at the middle strike is what we're targeting. So we're going to go a little bit out of the money, buy 1 call option, go further out of the money, about 10 points, exactly 10 points actually, and sell two of the, we're going to go buy the 380, and then we're going to go 2 points, 10 points out of the money and sell the 390. So let me get this one in the trade ticket. Okay. Well, that's where we're at right now. That's what we got down here. Okay. And midpoint now is $2.46. Okay. And that looks like about right. Okay, so from this point on up, from 395 on up, here's the expected move. It's going to be right about a 20 delta when you look at the expected move. That's usually the case. This would be about a 1 standard deviation move, which only happens about 16% of the time. If it moves beyond that price, you paid $2.50 for this. This would be trading for close to $5. So if you paid $2.48, which is where it's at right now, if from 395 and above, it's got to trade for $5. Why is that? Because the width between the strikes on the long spread is $10. The short spread cheapens the butterfly, right? It brings in a net credit, helps us pay for the butterfly, and that's only $5. So our potential gain is 10, our potential loss is 5, and because of that, beyond the strike, we can make $5 on that scenario. We can sell it for $5. We paid $2.50 for it. Maximum that we would make is about $2.50. If it goes out at the middle strike or very close to the middle strike, well, then it's worth $10. We could then we paid $2.50 for it, then you're looking at $7.50 approximately, right at that strike. We're announcing on a Tuesday before the open. You have all day Tuesday, all day Wednesday, all day Thursday, all day Friday. Part of the reason why I wouldn't want to do like a skip strike trade or something where I'm selling some premium, skip strike butterfly, or even a short call spread, because we just have so much time premium out until the end of the week. We have an expensive underlying Home Depot trading at $375. We have a volatile situation because we have earnings. It's a very interesting underlying stock to do a butterfly on because of all these things. Time premium has to go away by the end. You can do is if you're just doing one contract for every 1 by 2 by 1, your maximum risk is going to be this $2.48. But there's obviously some momentum in Home Depot right now because the stock is really bouncing. Now it's trading for $2.81. And so it's already moved. Oh my gosh, we're down $6.50. I mean, the stock has moved probably 5 points since 10:30 Eastern time this morning. So it's really starting to bounce back. Almost $3 now. Better get the trade sent, right? Let's do it. I guess we're not going to be buying close to that. And once again, this is a paper trading account, so I'm going to have to pay somewhere. I'll have to pay $3.50 for it. I don't think it will give me a fill, but with the markets the way that they are, I do think you should be able to fill very close to about a $3 in the real market. This is a paper trading app, so I got to give up something between the bid and the midpoint and the asking price, and hopefully try to get a fill. But I'm going to send this to the trading floor, and I'm just going to get it filled no matter what by the end of the day. But we're going to look to pay $3.50 for this, and boom. All right, our order is in there. Oh, we filled. Oh, no, we did not fill. We did not fill. Order pending, open. All right. Next, gold. Okay, so let's go back to the what if calculator. And let's talk about gold. I guess we'll start in the chart, GLD. And the stock has made a very strong move to the upside. And as expected a little bit, we did get a little bit of a sell-off. I mean, I think with metals, you always got to watch how far away you're getting from the 200-day moving average. Marketplace usually wants to try to come back and get within that range. Let's bring this back. It's not happy with me right now. There we go. All right. So bounced off of the 20-day. Here's the 50-day moving average. Here's the 200-day moving average. Solid move to the upside, but obviously there's potential. They've already made way all the way up to 508 before it kind of sold off, and now it was trading in a range for a while. We're back to this range, but here's one of the things that I like about gold. If I go in and look at the options grid here, let's pull up GLD. And if we look at gold, and I'm going to go out, this is more of a longer term trade. We're obviously not trading the earnings in gold. We're just looking at the price movement and considering all of the news headlines that happened this weekend. I still think that there's going to be a flight to quality. And at this point in time, no longer are people really talking as Bitcoin as the digital gold. So with gold, stock is right here. Let's look at the March 20th expiration, 25 days away. Is that what we had in the what if calculator? The 27th expiration. Okay, March 27th. Let's go to the what if calculator. Let's grab that trade. Let's send it to the ticket. And then let's go back to the trading tab and go to the March 27th expiration. So we're going to sell something at the money. And here's part of the reason why. Now, we've looked at doing, in the past, we've done some butterflies to the upside because we have an expensive underlying. GLD is the ETF that tracks gold prices. It does a very good job. It's not like some of the ETFs that just don't follow the commodity very well. This ETF has a history of tracking gold prices very well. So part of the reason why I like it. Second of all, $477. So you have a little bit of juice in the options because you have a higher price underlying. And look at this trade. If I look at the March 27th, 32 days away, and that's the expiration over here, and I sell an at the money option contract, I can bring in $18. I go down and I buy the 466 option contract. I'm bringing in $4.50 on a 10-point wide spread. So I'm almost getting 50-50 risk on my money, and I'm selling an out of the money option. Now, I'm only 50 cents out of the money, but that means that my break even is going to be 476 minus that net debit pay. Let's call it $5. So we're talking about 471, almost a 50-50 bet on this trade. 32 days remaining. We want some time decay to happen. We're going to give this, we'll probably be out at 15 days from now, around day 20, give or take. And that's the way that we would approach the trade right now. But the fact that you can bring in, normally if you did a 10-point wide spread on a traditional stock that isn't quite so high priced and all that, you'd be looking at bringing in maybe $3, maybe $2.50. But we can bring in $5 on this trade because of the way gold trades. We still have a high probability that it could come down to this level just by looking at the delta. So just realize that you do have that type of risk, but you have time decay on your side and you're getting almost a 50-50 trade if you believe that gold could go up in the short term. Now, here's what I meant about getting a little fancy on the trade. This is the trade. This will be the official paper trade. And actually, I'll send this one. Let's 365, 465. Let's try getting 420 in the paper trading app. We'll go 410. I don't even mind 410. So once again, I'm not trading close to the midpoint because we are in a paper trading app. It's not going to the live market. So you have to trade closer to the bid and ask. So let's send this one. And we'll watch that order. There it goes. Okay, so that order is at the floor. And we're slowing down a little bit here. Now, what I want to look at doing is I want to go short term, and I don't mind doing this trade on a shorter term basis where if I can get this filled, well, it looks like I got filled at 410. If I can get that filled for 410, we go back to the options grid and let's clear this out, get rid of that trade. And look at doing a butterfly on a shorter term basis. So let's go to 11 days and use some of that net credit to help pay for a butterfly. I don't mind that trade. Let's see where our chart is at. 480 right there, 495. All right, let's go 5 points. 480. 485, 490. What if calculator, gold long butterfly. All right, let's look at this trade right here. And once again, because of the premium, we're going to send this to the ticket. We can get this done for a fairly decent price, $1.25. So the maximum it can make on the upside would be $5 from 480 to 485. We're doing a March 6th expiration, so we're doing it very short term. So we're kind of doubling down. We're going to sell some premium. Hopefully the market at least stays where it's at or drifts higher. And then we're going to use some of that premium, just a fraction of it, to give ourselves even more leverage to the upside. So we're buying the 485, 480, 485. And then we're stopping short on the short spread and making this an open wing on the upside. And that's 487. We're only going out 11 days. We're going out to the March 6th expiration. And we're going to pay him $125 for that. It's not a bad trade whatsoever. And we're going to combine it with our short spread. So I'm going to add this position. Let's see. It's at 130 now. So why it seems like every time on the show when we do something, as soon as we do it, the market goes against us. I feel like that's the case at least. So we're at 125 now. It's at 143 at the midpoint. Let's try 175 in here. I would focus on the midpoint. Gold is very liquid. You can usually get fairly good midpoint fills on things like spreads and butterflies and stuff like that. So I wouldn't mind trying to get this done right now. It's at 150. I'm going to put it in at 175. Let's see what happens in the paper trading app. All right, that order sent to the floor. So let's go check out our orders today. We have the long butterfly. It looks like we got two of them in here that are working for a net debit of $3.50. We did fill on the short put spread, $4.10. So that wasn't bad. And then we got the long butterfly on gold. So the official paper trade, I think it's too speculative to say that this would be the official paper trade to buy the long butterfly and sell the short spread. But I really like the short spread. The short spread is bringing in a net credit of, you could get almost $4.50. And I think that you could fill close to that. I like that trade in this environment right now. Home Depot, we got earnings tomorrow. So we're going to have this trade in, buy the 380, sell two of the 390, stop short and buy the 395, get that done. Somewhere it was around $3. Well, midpoint is 250 right now. So 250 is fine. We got it in for 350, just trying to get an execution on this trade inside the paper trading platform. And I think that's it. If we have any questions or comments, please let me know inside the chat box. Happy to try to address anything that you might have. And last call. And if not, we'll be back on Wednesday. We'll see how our Home Depot trade worked out. And we'll also look at a new trade in NVIDIA. Thanks for stopping in for Options Guide TV. Hopefully see you this Wednesday at 11 a.m. Eastern Time inside the Tradier Hub, hub.tradier.com. Hope to see you in the hub.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.